Yo, what's going on, boys? So today I'm going to be explaining how I took this loss on US 30. Now, this is a trade I have taken on the 5-minute time frame with my standard entry model, and this is one of those statistical losses where everything, aligned with this trade. And I'm going to show you guys. I'm going to break it down. Now, this is the first trade I've taken in a while. I have taken two trades, both closed at break even as of recently, but mainly since April was when I was really taking a bunch of trades. April I took trades, March I took trades, but May and June has been pretty slow for me. Just a couple break-even trades here and there. But this is the first trade that finally was a great trade that we were able to hold through. No one was speaking or anything like that. So this was either stop loss, TP for me. And our bias was 100% correct here on this trade. So we had a bullish bias here. And again, this is US 30. I have this pair specifically tested for the last 4 years. This is a pretty good pair. And our overall bias on this was bullish. So let me explain my entry model real quick for anyone new watching this. Always have to do this here. So we want to look for trending markets, okay? So obviously, overall, on the, let's just say the hourly time frame, markets are going to be looking something like this, right? And internally, let's just say this leg to this leg right here, okay? Or from this leg to this leg, you're going to have the 5-minute time frame look something like this, okay, right? And here and there, internally, with that internal price action, you're going to get some liquidity sweeps, okay? And what do I mean by that is you're going to get some areas where prices is taking opposing liquidity like this, okay? So price will be taking opposing liquidity, and what we look for is we want a tap into a demand zone, right? So that'll be something like this. And we want to see, there's a couple factors, right? You don't want to see candles close inside or anything like that. And if all of that aligns, then, it's a valid trade. Of course, more goes into it. But, that's pretty much just the basic understanding of it is you're finding trending markets. And when markets are trending, they have to find opposing liquidity, which is going to be stop orders below you with a higher low. And price comes down, takes those orders, and that puts enough liquidity into the market to then continue buying up. And of course, we pair that with the confirmation of actual buying pressure coming from a demand zone under that liquidity. Okay, so again, you want to make sure higher time frame is trending, and then internally it's going to look something like this. So if you look like US 30, for example, US 30 is a bit more choppier, but it's the same overall. If you look right at that higher time frame, let me just delete these two here. If you look at this higher time frame, right, on the 1 hour time frame, we do see US 30 has been trending up for a while now, right? We've had beautiful bullish price action all throughout here, beautiful bullish price action, and right here we're just beautifully in that expansion phase to that next higher high. And if we drop down the 5-minute time frame, all we want to do is capitalize on that movement, right? We want to capitalize on that bullish movement. So I told my Discord this morning that I had a bullish bias on. I would be looking for buys on US 30, and we did get a buying opportunity right here, right? So all price was doing right here is, if you look at it from this perspective, is price is making these higher lows, right? It's making these higher lows right here, and higher lows right here. Now, this was my thought process at this point in time, right? We're reacting beautifully off this area previously where loads of buying pressure came in, right? So we're starting to see support from this area come in. And you can see that market structure shift, right? You see this last low get taken out. You see these highs get taken out, right? And from here, market structure internally is shifting from that internal market structure to now bullish market structure, right? To continue up. And like I said, our bias was 100% correct. It's just one of those statistical losses where price chopped around a little bit. Ended up making one more sweep of liquidity there before continuing, in our overall direction. So this is what I'm talking about by, like, if your trade loses and your bias is 100% correct, trade's going in your way, you entered out of your roles and you didn't like FOMO into a trade or anything like that, it's statistical, bro. Do not look for reasons of, oh my gosh, why did this trade lose here? Is this here? Is this here? Like, why did I, lose this trade? It's just, you're going to be searching into an infinity, whereas it's just a statistical loss. So if we break this trade down, again, right here, overall bullish, right? And that's pretty much it. You're just trading within trend. There's really not too much to overcomplicate here. And See this nice demand zone right here, followed by this level of liquidity. Now price came up, took out its own high, and price came down. And this is one of those interesting ones where it actually closed invalid, but at the time of the live execution, it gave us a beautiful break of candle entry. So if we actually replay this, we'll go back to this candle. You guys can see how beautiful of a reaction we're getting here on this demand zone. Absolutely amazing reaction, beautiful wick, right? And I would personally not take flip here, flip entry, because it isn't like on a new 1 hour candle where, you know, those higher candles have more volume and stuff like that. It was relatively a new candle. So, or relatively, it wasn't a new 1 hour candle. So still beautiful reaction. And I was fine for this break of candle entry, which would be after we sweep the high of this candle. And stop loss under there. TPs at a strict 1 to 3. And yeah, if you play this out, one candle, you get that break of candle entry, right? Beautiful entry, enter that break of candle, and then it just ended up reversing, and that's just one of those trades you gotta get used to there. It ends up reversing on you. Candle closed very poorly, kind of at this point in time. Didn't look too good. Because obviously, when you back test and stuff like this, you actually don't see trades like this, right? Because, you see them as, they closed inside, this and that. You don't realize, well, there was a break of candle entry here, right? These aren't as easy to see as normal zones where we clearly react and we get a bullish candle closing off them. They aren't as easy to see, right? Because they close inside that zone, and you're automatically assuming, right, that this trade's invalid, right? If we turn on our indicator, right, it doesn't even pick it up because it's picking up this candle closing inside of the zone, so it's invalid, right? So yeah, that's something you got to understand as well. But yeah, price ended up shooting lower. We consolidated. New York opened, right, real volatile. We had war speaking later, which I knew that was coming, but this trade was way too early that it wasn't going to have an effect on it. And then, yeah, we just took out that low one more time, and then we just continued with the overall trend, which is bullish here, and that's what we're seeing here. Price putting in a new high, just like we thought, just like our overall bias was. So, again, I just wanted to show you guys a statistical loss. So, this is our stats right now, 15.5 RR for the year, which is pretty good. This is the most profitable that I've ever traded this year so far. Last year was just pure unprofitability for me. I was just trying to figure out the market, and then the year before that and the year before that. So this is the first year that it's actually been profitable for me. So I'm just going to keep doing what I'm doing. And it's been working quite well. It's been working really well. I have the back testing data on my exact model right here of what I use. So again, this is a statistical model that's been proven for the last 4 years. So yeah, we just keep executing it, and like I said, use your back testing results, even cut them in a third, and only expect that. Because remember, live execution, you're not going to be trading absolutely perfect, right? Live execution, you're not going to be trading perfect. So yeah, this is what we have so far this year here. So yeah, that's pretty much it on this loss on US 30. I'm glad that finally we are getting trades. These last 2 weeks, we've finally been getting trades. I think a big reason for me it's been dry is because the Iran war was causing me personally not to trade oil. I wasn't trading oil, and oil was actually one of those pairs that gives a lot of trades. And then the Japanese yen is kept intervening, and it actually is still intervening. We had one yesterday at this time. We had another one the day before. Actually, this was this morning, I guess. Wednesday, middle of the night for me. But this one was in the session yesterday, and then we had another one yesterday. So it keeps happening. So JPY pairs, unfortunately, aren't like quite there yet. But they've been doing this throughout May and June as well. So it really cut my oil pair off, and it cut all my JPY pairs off. So it kind of left me with gold, NASDAQ, and US 30. And, when Trump is nonstop speaking and stuff like that, it makes NASDAQ and gold volatile as well. So it was really tough market conditions, but things have calmed down within the last 2 weeks. Actually, so far this week, we've seen multiple trades actually pop up and play out. So it's actually been, trading conditions are definitely getting a lot better. And we're just going to keep on executing like we've been. And, yeah, that's pretty much it. I just want to show you guys that loss there. and explain everything. And that's pretty much it. I know a lot of people don't like to show their losses, and I don't really understand why. It's just, this is what trading is. It's just a statistical game, right? If you can't handle a loss right now, nothing's going to, what makes you think you're going to handle a loss 30 years down the line when you're trading on $500,000 capital, when you have a family and you do this full time, this and that. You can't handle a loss now, and you're stressing out about a loss now, or even show the public a loss now, bro. Like, what makes you think that you're going to be able to do this skill set for the next 30 years? I don't understand that. The trading space, is at least the LSD space, or the people who trade this will not show any losses, and I do not understand it. I don't understand why. But that's pretty much it. That's that trade. Let me know in the comments if you guys taken any trades this week. I know there's a lot that popped up. I know a lot of people took a gold short this week. I personally just skipped that one, but that was honestly a good trade. I could see how people could take that as a loss right there. So I wouldn't beat yourself up over that gold short if you took that. But yeah, let me know what you guys took so far this week, or if you've taken anything last week. I'm curious. But that's pretty much it for this video, and appreciate you guys for watching. And yeah, I'll see you guys in the next one.